The Union Budget 2023 is a real bonanza, not only for the individuals, but even for the corporates. And when we talk specifically about the financial services sector, there have been quite a few reforms which have been rolled out and which have been expected over a period of time. There have been significant number of developments in this particular sector over the years, and these reforms will only help the financial services sector to further strengthen its foothold in the country. As you all are aware, financial services is a very inclusive sector. It is particularly one sector which cuts across all the sectors, whether it's pharmaceuticals, manufacturing, real estate and infrastructure, because ultimately the need for finance is definitely there for all the sectors put together, especially for financial services. Having said this, I think the biggest and the fundamental development in this particular sector has been the fact that there is a large capital expenditure outlay, which is suggested to the tune of around 10 lakh crore. And that really is going to be robust to facilitate the entire circulation and the movement of money. The kind of money that would definitely be deployed now in the infrastructure sector would be very selective, and at the same time, credit risks definitely will gain a top priority and momentum. Secondly, I believe increased opportunity is there for the housing finance companies on account of increased outlay towards affordable housing. Over the last couple of budgets, affordable housing has been the emphasis, has been the focus, and this particular budget has actually increased the outlay to the affordable housing under a particular scheme, which is going up by around 66%. And therefore, the housing finance companies will really stand to gain. And in particular, the National Housing Bank, which is a regulator of housing finance companies, has a cutout role now as a supervisor for housing finance business. The third thing I believe this particular budget has rolled out typically in financial services is, of course, the focus on the talent development, which offers opportunities for global capability centers in India, what we call as the GCCs. You look at the large international financial powerhouses, which have a base in India as a GCC. This budget is now going to be focusing on the talent development through various educational and skilling initiatives, which will definitely ensure a continuous flow of talent to these particular GCC capability centers, which will definitely help these centers to get better resources, trained resources, global capability resources, and definitely bring in a lot of money and a lot of trust into the GCC business in India. For a long time, it has been the dream to enhance the foothold of financial markets in India, and in particular, I think the debt markets in India. The debt markets in India have not been as big as what they have been in some of the developed countries. And this particular budget has a thrust on the debt market in India. It really provides an opportunity to develop a robust secondary market for very high yield fixed income securities, to provide a market for securitized securities, etc. And in this case, the Reserve Bank of India will definitely be developing this particular market in support, in collaboration, in conjunction with the SEBI or Securities Exchange Board of India. There is also a provision to innovate certain insurance products in the agricultural space, given the fact that the general insurance players play a very, very important role to serve the undeserved or underdeserved and new risk areas for the agricultural space, and typically for the agricultural ecosystem players. And therefore, you will see quite a few incentives being provided to specifically ensure that some new insurance innovative products are being rolled out by the general insurance players. Coming to ease of doing business in India, I think that's been the agenda, and it really helps in the financial services sector. You have got multiple regulations, even within the Banking Act or in the banking regulations. There are multiple regulations. So the regulators have now been empowered to sort of, review all the three different regulations prevailing in banking, which is the Banking Regulation Act, the Banking Act, and one more. And what they have been planning to do is to rationalize these, in case if at all there are any inconsistent provisions. There are multiple provisions. There can be provisions which can be very sort of, administratively difficult to be followed under the three regulations. Those are going to be simplified and rationalized, and therefore a good amount of clarity will prevail going forward on regulatory compliances on banking. As far as the the municipal bonds are concerned, there is a particular provision in this budget as well. In many countries globally, municipal bonds have been the focus, but in India, it has never been the focus. And therefore, this particular budget will focus on development of sustainable cities and municipal bonds, which can serve as a very effective means of funding the same on an ongoing basis. Which means that RBI will now have to consider developing a market for the municipal bonds, and therefore this particular focus would definitely pump in money for the municipalities, which ultimately will be deployed in the development of cities and their infrastructure. We talk about wealth creation, and I believe Amrit Kal will bring in growth across the country and investment vehicles in the form of mutual funds. Very much, mutual funds will definitely prosper because mutual funds now will offer great opportunities for wealth creation. This is the only way where the wealth will be collected and deployed in the most appropriate manner. The debt schemes will gain more momentum. As I mentioned, the entire objective is to develop the debt market, and therefore the debt schemes will gain more momentum as well. There is a new credit guarantee scheme which is being intended to reduce the lending costs by around 1%, and that is really a good percentage, I would say, and also provide them micro, small and medium enterprises with an additional amount of 2 trillion rupees, which is a big amount, 2 trillion rupees in collateral-free loan guarantees. So these particular loan guarantees are now going to be collateral-free. As you know, the MSME sector employs around 11 crore people and accounts for more than 30% of the GDP. So this particular new initiative or the reform rolled out will definitely give a fillip to the MSME sector as well. There is a provision on giving more powers to SEBI to award some degrees, diplomas for courses in securities market law, which will be carried out through NISM. And this definitely will enhance more awareness, more knowledge, and have a structured approach in terms of trainings, etc., for being aware on the new securities market law. Talking about some of the misses or some of the expectations that could not be fulfilled, I would say that one of them has been a long pending one to rationalize the foreign bank income tax rates. It's been there for a long time. As you know, the income tax rates of the foreign banks are not on the same platform, not in the same category as for Indian banks. And this is something that the foreign bank branches in India and the counterparts abroad were looking out for a long time. That's not happened, and that's a miss. The guidance on cryptocurrency is surely a miss, and the guidance on the digital rupee also is a miss. But of course, I would say that with so many other reforms being done in the financial services sector, over a period of time, these things also will be looked into. And I'm very sure that, the financial services sector in the future would definitely gain from these things. One more point, and the last point I believe is, of course, a provision which now actually says that if at all any policy you buy, a life insurance policy that you buy after 1st of April 2023, the proceeds that you receive upon the termination of the policy or upon the expiry of the policy would now be taxable if your annual premium is more than 5 lakh rupees, which was never the case earlier. However, God forbid if the person dies and the family receives that particular amount, at that point of time, it is not taxable. But during the survival of the individual, such insurance proceeds received for a premium above rupees 5 lakh per annum would now be taxable. And therefore, this is not supposed to be so much of a welcome proposition, but that's what the law is, that you get so many benefits, and therefore, if at all something is being rolled back, it should not matter. So overall, a great budget from corporates and individual perspective. Government has done everything possible, and definitely the financial services sector is here to gain from this particular budget and expects quite a few reforms over a period of time. Thank you.